all, this is Monika from Taxmann's Indirect Tax Team, Advisory and Research Support Services. I hope you all are doing well. In this presentation, I am going to discuss the changes made by government in the manner of reporting in Form GSTR-3. I will also be covering the recent clarifications issued by the government in respect of Form GSTR-3. This is important to be discussed because this will affect the taxpayers at large. As we all know that Form GSTR-3B is used by the taxpayer for furnishing the details of outward supplies, input tax credit, and the payment of taxes also made in Form GSTR-3. So, looking at the current manner of reporting of outward supplies in Form GSTR-3B, currently Form GSTR-3B provides table 3.1 for furnishing of details of outward supplies and the inward supplies liable to reverse charge. This contains the following columns: outward taxable supplies which are other than zero rated, nil rated and exempted, outward taxable supplies that are zero rated, other outward supplies that are nil rated or exempted, inward supplies that are liable to reverse charge, and non-GST outward supplies. So we can see that there is no separate reporting requirement for the tax that is to be paid under section 9(5). Now the government have inserted a separate separate table after table 3.1. This new table 3.1.1 has been added. This provides a specific reporting requirement by when the supplies are affected through e-commerce operators and the tax is to be paid under section 9(5). So currently how this reporting was made: on account of e-commerce operators, all the supplies, be it the commission, be it the supplies on which tax is to be paid under section 9(5) or any other supply, all of them were to be reported in outward taxable supplies other than zero rated and nil rated and exempted supplies. But after the insertion of this table, the e-commerce operators would be required to report the supplies on which tax is paid under section 9(5) in a first column of this new table, that is taxable supply on which electronic commerce operator pays tax under section 9(5). And other supplies such as commission income or any other supply will be reported as it was done earlier. Now talking about the suppliers who are affecting supply through such e-commerce operator, the suppliers on which tax was paid under section 9(5) is currently required to be reported under 3.1 column C, other outward supplies which are nil rated or exempted. But after the insertion of this new table, the supplies which are affected on which taxes to be paid under section 9(5) are to be reported in this taxable supply made by the registered person through ECO, on which ECO is required to pay tax under section 9(5). And the other supplies will be reported in the same manner as it was done earlier in table 3.1. Now talking about table 3.2, the government has issued a clarification that the taxpayers are required to separately report the supplies such as interstate supplies made to unregistered person, the supplies made to composition taxable person, and the supplies made to UIN holder. So this table 3.2 is a reporting requirement. All the outward supplies are already included in table 3.1. But out of 3.1, where the supplies are made to the specified persons which are specified in table 3.2, then the reporting is to be made under this table. But some of the taxpayers were of the contention that since they have reported their outward supplies in table 3.1, table 3.2 is not to be mandatorily filled. But now the government has come up with a clarification that table 3.2 is a reporting requirement and it is mandatory to be filled. This doesn't matter that you have already contained it in table 3.1. This clarification has been made because the reporting in table 3.2 facilitates the central government to allocate the tax to the specified states. in a proper manner. So these are the changes that are brought in respect to the reporting requirement of outward supplies. The insertion of new table 3.1.1 will mainly affect the e-commerce operators, aggregators such as food aggregators, hotel aggregators, cab aggregators, and the clarification that has been issued in respect of table 3.2 will affect the suppliers who are affecting supplies, interstate supplies to unregistered person, who are affecting supplies to composition taxable person, and who are those who are affecting supplies to UIN holders. Discussing the change in manner of reporting in ITC table, let us first discuss the existing manner of reporting of input tax credit. So the current table of input tax credit provides the first head as ITC available, whether in full or in part. This contains the ITC in respect of import of goods, ITC in respect of import of services, ITC in respect of inward supplies that are liable to reverse charge, but other than import of goods and import of services, the ITC in respect of inward supplies from input service distributors, and all other ITC. Thereafter, the ITC reversal disclosure is required to be made. This first contains the reversal under Rule 42 and Rule 43. Rule 42 and 43 states the reversal requirements where the inward supplies are are used for affecting taxable as well as exempt supplies. And column 2 of the ITC reversed head contains the other reversal requirements such as reversal under Rule 37 and reversal under Rule 38. Rule 37 contains the reversal requirement where the payment to vendor is not made within 180 days, and Rule 38 contains the reversal requirements for the banking and NBFC companies. Thereafter, Head C, that is net ITC available, will be auto-calculated by reducing the total of B from total of A. And this amount will be credited to electronic credit ledger. Now let us discuss the head D, ineligible ITC. This head contains the details first. In the first column, this contains the details of ITC that is ineligible because the same has been blocked by section 17.5. Section 17.5 contains the block credits such as credit on motor vehicles or catering services, etc. And head D also contains the ineligible ITC on other account. So this is the current manner of reporting of ITC in Form GSTR-3B. Now let us have a look at the changes that have been made in the manner of reporting in ITC. So the first head, that is ITC available in full or in part, has not been changed. This is the same as earlier. This contains the ITC on account of import of goods, import of services, inward supplies, liable to reverse charge, inward supplies from input service distributor, and all other ITC. Then moving to the ITC reversed, change has been made in the manner you have to report in the reporting manner of ITC reversed. Earlier, we were showing the reversal separately for Rule 42 and 43, but now the reversal requirement under Rule 38 and the ineligible ITC under Section 17.5 has also been included. So now, under Table 4B1, the reversals to be made on account of Rule 38, 42, 43 and Section 17.5 are to be shown. And under the reversal 4B2, the reversal made on other accounts are to be shown, like on the reversal made on account of Rule 37. So if you claimed the credit on certain invoice and you did not make the payment to the vendor within 180 days, the reversal of the ITC earlier claimed is required to be reversed. So that reversal will be shown in table 4B2. Now, regarding the table, regarding the column 4B1 and column 4B2, the government has specifically clarified that 4B1 will contain the reversals that are absolute and not reclaimable, and 4B2 will contain the reversals that are reclaimable upon fulfillment of certain conditions. So, this is a specific clarification brought by the government. Now, column 4C, head 4C, net ITC available will be auto calculated by reducing the total of B from total of A, and this amount will be credited to electronic credit ledger. Now, let us discuss the reporting requirement as provided in table 4D. 4D contains the other details such as item reclaimed which was reversed under table 4B2 in earlier tax periods. So this contains the detail of the ITC that was claimed, then reversed, and now we are reclaiming it. So this that reclaim of ITC will be reported in table 4D1. Now discussing the table 4D2. The column 2 of table 4, head B. This contains the ineligible ITC under section 16.4. So 16.4 states that the input tax credit on certain invoice is ineligible or it cannot be claimed once the time limit provided for claiming the credit on such invoice has lapsed. So if you are if there is a certain invoice for the time limit for this and the time limit for this claiming the credit of same has lapsed, then it will be shown in 4D2. Also 4D2 contains the details of the invoices, the ITC on which has been restricted due to the place of supply provisions. So let us take an example for this. This will contain the ITC on the invoices where the place of supply and place of supplier are in same state, but the recipient is located in different state. In that case, what happens is this CGST and SGST of the state where POS falls will be charged, and the recipient is since the recipient is located in different state, he will not be eligible to claim the credit on such invoice because he is not eligible to claim the credit of CGST and SGST of some other state. So such credit will be such ITC will be reflected in 4D2. So we have discussed the provisions, the reporting requirements that have been changed in Form GSTR-3B. Now it is yet to be seen whether these changes that have been made will be incorporated for the return that is to be filed for the month or quarter of June, and the due date of which falls by 20th or 22nd or 24th of July. I hope this presentation was fruitful for you. In case you have any question, you can connect us at connect@taxmann.com. Thank you.